Hello, Maverick traders. Welcome out to your market roundup for December 6th. Corey here with you. As always, a quick reminder to make sure that you follow your trading plan. Let's talk about where the markets are at and where we think we're going. So, in terms of the markets, if we look at the Dow, S&P, NASDAQ, and so on, pretty rough day overall. Down, call it 1.5 to 2% across most markets. Oil took it on the chin, down 3.7. Gold flat on the day. Most stocks declining, about 70% of them going down. And the 50-period moving average has been bullish, but swinging a little less so. Now 64% above the 50 MA. That's certainly down from where it was last week. On the daily news, Jamie Dimon, the CEO of JP Morgan, said that inflation may be driven by the consumer, and basically the consumer came into this year in a very good spot, had quite a bit of savings compared to history and so on. And with inflation and price hikes and different things going up in cost, and the cost of living has gone up, well, those savings are being depleted, and that may drive the next recession. Bank of Canada nears the end of their interest rate hikes, basically kind of suggesting that, well, we're going to wait and see at this point. We think we've gotten out ahead of it. We're kind of at the levels where we think we can get inflation under control. And certainly in Canada, they're very much sensitive to the oil and gas markets, precious metals, and so on. And those prices have come down pretty substantially in oil and nat gas specifically of late. So let's take a look at markets here a little bit more closely. We touched on this last week, and I kind of need to reiterate here that one of the things that I've personally been looking for is a sign of exhaustion. And so the way I look at this, the size of these candlesticks, don't believe it when they tell you size doesn't matter. It matters, okay? Here you had a huge bullish expanded range candle, so big it literally swallowed up the prior 3 days candles. It was just a huge reversal. To me, this is the starting gun going off. Do you see how everything turned bullish from that inflection point? That was like the flush out. We had gapped down. Anyone that was willing to sell was pushed over the edge, and they threw in the towel and they gave up hope. That started the race. And then the race begins, and like any race, you have some lulls. You push forward, but eventually, off in the distance, you see the finish line. And this is the second place where you get a jolt of adrenaline, just as you got a big jolt of energy at the starting line. You get a big jolt of energy and adrenaline at the finish line. And last week, when the Fed came out, and basically that's what they're suggesting was the reason for the driving of prices higher, I don't think that's really the case. I don't think the Fed said anything different, really. It's just technicals. It's basically that we don't have a 200-day moving average, but the 200-day moving average was here. The market knows if they can push the market up above that level, that there will be short covering rallies, there will be buying pressure up there will be chasing. And so the market pushes and the buying intensifies. And the question is, do you trust it? Should you be buying on that huge burst, or should you be getting nervous, selling, turning bearish, and so on? Especially since, although we were going above the 200-day moving average, what I call a squish into, you temporarily, kind of almost a false move. It's like a mattress or a trampoline. You squish into it, right? We talked about that, and then you spring the other way. I got crazy bearish on the markets after that. That was what I've been talking about for weeks, is watch for the big finish. If it gives you a big exhaustion, expanded range candle, that is likely the sprint for the finish line. And it couldn't have been more precise. The very next day was the top, and away we've gone to the downside. So one would think that I'm just outright bearish at this point. Well, interestingly enough, we probably should have had the 200-day. 200-day moving averages like this. And the 200's downward sloping, the 20's upward, the 50's upward, but we just crisscrossed, and basically all these moving averages are converging. This is similar to kind of back here, and look at how ugly it got. We went down for 2 days, up for one, down for another, up for two, down for two. And it's just this mixed bag. Actually, that's what I think is most likely to happen here for the next couple of weeks. Is my best guess is it's going to do all of this stupidity that goes nowhere. That, CPI news and Fed meeting and this and that, and they'll try to drive reactions. And I today I actually closed up my shorts, which worked really well. I can't say I did everything right though, because I did buy some energy plays that took it on the chin. So I didn't make money everywhere. I made some money overall on this, but I closed up all my bullish trades back here. I got bearish on the market. I should have just stayed with that. Then I added some energy bulls, which took away from my returns as they've taken it on the chin here the last 2 days. But net, I basically closed up almost everything. I've got a bearish position in Disney and a bullish position in one energy name that's basically, probably going to head towards a max loss. And I just took profits, wrapped it up, and I don't know if I'll do much of anything. If I was inclined to do anything, it would be fading. It would just be kind of playing neutral. And there's not a lot of money in that. Little theta trades where you make a little bit from some time and volatility decay for a couple of weeks. Those aren't big money makers. I might do a little bit of that, but I have to say I'm just neutral. I think it's going to be a point of frustration. It doesn't mean volatility's going away, but if you go down one day and then up the next, even if they're both kind of big, wild days, you went nowhere. And then you go up the next day and then down the, 2 days later, you went nowhere. And that's what I suspect is coming next. The QQQ, I'm not optimistic. I'm not pessimistic over the next couple of weeks. My guess is that we'll come back next week and we'll be relatively unchanged. So I've somewhat lost interest, to be honest, in most things and most ideas. I got burned on energy, which that one surprised me. I thought energy was really set up well, but the market tell was on Monday. On Monday morning, after China looked like they were reopening, and China's a big demand center for energy. And this was part of my thesis. I thought what's happening in China, they're going to have to reopen. That should drive some demand for energy. That's good. I thought some other factors were in place. Seasonality. Energy is the strongest performing sector. Those tend to do well into year end because people don't want to sell and have a huge tax bill. So I thought that was working in energy's favor. Energy was also still in an uptrend. I thought that was working in its favor. I also thought the oil prices were probably around their bottom because it doesn't make sense to me that the Strategic Petroleum Reserve, the U.S., selling into that they would just do it perfectly. That they would tell the markets that they're going to be a big buyer at 65 and that energy would just go straight down and allow the U.S. to reload at much lower prices. I mean, usually when a country lays it out for you and says, here's where we're going to buy and here's where we're going to sell, the markets don't allow them to do that. So the U.S. might have the best trade in energy all year. I'll be shocked if that's the case. I thought that wouldn't happen, but sure enough, oil's headed, at least for now, going down there. I'm not sure that's going to happen. But if you have a huge buyer and they're telling you we're going to buy down here, it just rarely gets there. It should basically not go down to that big buyer because you can kind of arbitrage. You can buy in front of them, have them supportive of your trade, eliminating a lot of the risk if they're a big enough buyer because it will just keep the price propped up. And if the prices go up, you make money. And if they try to go down, you got that huge buyer underneath you. So anyway, energy is perplexing to me. I'm a little frustrated with that sector because, again, it would have been, just a huge period for me. I was short markets, which really, really worked, but energy did drag. Otherwise, a little strength in utilities. Large cap tech just continues to be ugly. We've had Amazon and some of these on the bearish watch list for the past couple of weeks. Financials, big money center banks have been hit, but we're going to look at a couple other financial ideas. So I came into this week certainly expecting and positioning for downside. I have to take, and I'm going to say, even though there is a CPI coming out, there's a Fed meeting, there's PPI this Friday, there are, options expiration next week, et cetera, et cetera, et cetera. The market hasn't, doesn't look like it's going to move a lot to me. You've got some, you know, demand potential from those that shorted down here. That's demand. You've got some supply potential from those that bought up here. Kind of keeps a lid on things on that direction. All the moving averages bunching together and kind of coming together in sideways fashion. This all leads me to believe this is the perfect recipe for more neutral trading on a big market perspective. So you'll notice down here, I've got SPY on our neutral watch list. Let's take a look at a few names. Berkshire Hathaway, I have owned and traded and done some really good things trading this to the upside. It may not look that great because we had this big swoon, but it's actually up for the year, which is interesting. There's not a lot of stocks up, and this one is one. I mentioned this over the past couple of weeks that it's the type of stock that I'd continue to look to buy the dip. And while I haven't really jumped in, I suspect that I might trade this towards the upside into year end. So we shall see, but I think there may be an opportunity for this to kind of head towards 325. Maybe not up a lot, but it should outperform the broader markets. Caterpillar, okay, nice consolidation up here following a retest of major resistance. So this is what you like to see, the sideways price action. And I don't think, again, I think it's done pretty well year to date. It should hang in and even challenge a little bit higher prices. Since I'm market neutral, it's hard for me to get too excited on most any of these things. And finally, IBKR, again, kind of come up to prior resistance. And this one has more of a cup and handle feel to it. And you could even argue this is a little mini cup and handle. So it's kind of a pattern within a pattern. Huge cup and handle, small cup and handle. But either way, in the not too distant future, should be challenging some higher prices, and I would expect it to outperform. SPY, put this on the neutral list for a reason. My guess is that we've probably traded in a range. I'm going to give it from about 380. I don't see us going any lower than that, and I think may not even go that low, frankly. And we'll call it maybe 415-ish, and probably you could tighten up that range, but that gives you some idea that I just don't think. I mean, there's those calling for 450, 4,500, 10% move up. I think Tom Lee and some of those guys on Wall Street, and then others calling for a crash down here and so on. I just don't think that's where we're at. I'll bet this is a tug of war and mass frustration for most people. On the bearish side, any pops whatsoever, I just really like the idea of shorting AMC. This isn't so much technical, it's just more fundamental / technical. I mean, it's clearly trading bad, but here was a perfect bearish setup. That little pop was a bearish setup. This pop was a bearish setup. This pop was a bearish setup. And this pop should be a bearish setup. And it's working. By the way, GameStop is right in that same AMC. These are those stocks that, they had this big following, right? The Reddit group and so forth. Basically trying to stick it to Wall Street. And they were meme stocks. And their day in the sun was right along with crypto. I think crypto and meme stocks are one and the same. I don't even know how you spell meme. I don't know if I've ever written meme. I'm not a meme guy. But anyway, crypto and meme stocks. And I think as crypto deteriorated, it also spelled disaster. And we talked about this months ago, that I think you just continue to to short these, and I like to do it on any pop. So I'm not saying you short GameStop today, but why did I bring this one up? Well, it reports earnings tomorrow. Maybe GameStop has some big bursting move up like this, and I would absolutely be looking for a bearish entry point. If you've been shorting the rallies, it's the gift that keeps on giving. I don't expect that to end anytime soon. Last but not least, Square. This is one that we've highlighted, and I'm not going to call it a meme stock, but it is crypto related. They changed their name, actually. I think they now go by Block for blockchain. And you can just see it's just kind of this slow, methodical, but descending triangle. That peak has rolled over. I think this sets the lower high, and I suspect we'll go down here towards the lows and quite possibly lower than that into next year. Again, I'm market neutral, so I can't get super excited about anything, thinking that we're going to churn a lot. I'm not so sure that these are going to move a lot over the next couple of weeks, but kind of ideas out even into next year that I think should work on the bullish and bearish list. Markets are still in a bear market overall, but I am really just neutral. Today, at the end of the day, I had pretty much wrapped up everything and closed, taken profits on bearish trades. I still own some investments, or I think I have 2 trades going, but that's it. I mean, for only 2 trades, I'm basically neutral. I don't have much of anything going. So we'll see if I'm right about that or not. PPI on Thursday. Next week, though, you got the Fed meeting on Wednesday. You've got CPI. Of course, you got options expiration Friday. Earnings for the rest of this week. Here's GameStop, which we highlighted, but you also have Costco and Lulu. You've got Broadcom. You've got a few different companies there reporting. Hope you've enjoyed this market roundup. For me, I can't pound the table like I have. It's been a fun couple of weeks. I felt like there were some huge opportunities. First, to really play the market up into that exhaustion, and then second, once that exhaustion hit, it was a nice bearish entry point for a trade. But for now, I think I'm going to sit it out a bit and just watch from the sidelines. And if I do anything, it's probably more going to be a fade. Like, say tomorrow, we've sold off for the first few days. I think we're down 4 or 5% from that peak. We have another day like that tomorrow that shows any signs of life and coming off the lows. Maybe I'll fade it and buy a little bit. Because again, that's kind of what I think, is that we're just spinning our wheels. So into weakness, you might get a little tiny bounce back, and into any strength, you might give a little give back, but nothing too exciting for me. Hope you've enjoyed it. We'll see you next time. Goodbye, everyone.